I want to screen share what we've got on here.
Minus 0.2%.
Is that okay?
Minus 0.2% for the nationwide house PX month on month. You're only coming out at 2.4%.
Yep, there we are. That will do.
Yep.
Yep. Brilliant.
Prices month on month coming out minus 0.4%. You're only coming out at 0.9%.
Yeah, we're ready.
Yes. So as we discussed today, we are going to talk about different things. And as a retail trader, I'm looking at the charts, dollar and USD JPY, which is ranging about 144.890. But let's hear it from Neil. What are your insights on the currency pairs and how to trade the currency pairs, Neil?
Well, good morning. Yes, and the last day of the month in August, we hit September on Monday, and that is, remember, our holiday in USA, Labor Day, so it should be fairly quiet.
Okay.
But what we look at currency pairs, especially when people are new and when they come into trading, whatever, they tend to go to Forex pairs, mainly because a lot of the platforms they use encourage you to trade Forex pairs, and obviously they are used throughout the world. Whether you go on holiday, whether you're buying a house or selling a house, whatever, they are massive. Was it 9 trillion a day is currently used in currency pairs to what you trade with. So, as you mentioned, the dollar yen here, we've got the dollar yen here, and we see in theory, if we come back to the dollar yen here on the chart and look at where we were round and about 1 o'clock, 2 o'clock when Japan opens. Now, Japan had their inflation figures today, or Tokyo had the inflation figures today, and they were higher than normal. So, what does that tell to me, being a fundamental news trader? Well, if your inflation is high or higher, the best medicine to stop your inflation going higher is to raise interest rates. So, if Japan raises interest rates, you would expect the yen to rally, and we've seen here in theory that yen's rallied all the way down there, as it did yesterday when we saw it rally down here, because it meant the US figures were good yesterday. So therefore, their economy is okay. So it means less chance of them cutting rates at the next meeting. So we saw the yen rally from 145 down to 144.70. So we look at that for the news. So the same thing for the FX. The dollar, in theory, took a bit of a hammering in most of the markets. Yesterday, we saw when that figures come out yesterday, we saw the pound rally as well. So everything is, in theory, is that whatever happens to the dollar, the figures that come out, and in theory today, if we look down here, we do have at 130 US PCE spending. Now, PCE is the inflation index, which Mr. Powell, those of you who don't know who Mr. Powell is, he's the boss of the Federal Reserve. He looks at that for inflation. So if the inflation's higher, therefore, the way he can combat inflation is to raise rates and vice versa. So the currencies are probably very susceptible to inflation figures. So that's why we keep our eyes very closely to them. And that's where you get the most reactions to when they trade.
Okay, got it. So, even without looking at that, I was looking at pure charts on dollar yen, and I was looking at the price where the 4 hours fair value gap happened, and market has retraced that same level at 145.52. So if I'm keeping a stop loss at 145.52 and looking for let's say hitting 142, that's my target, which I have kept and taken a trade on, which is very minimal quantity, and the risk is around, and the target is around 142.59. This is how I look at the market, instead of having the basic fundamental analysis of whatever you said currently.
Well, there's two things here. I've just drawn a line at 145.52, and in theory, we hit that yesterday at 3:30. The news that comes out now. What, to me, you've got to try and work out from your technicals and your fundamentals. And remember, we're trying to get a cocktail of both to be a more consistent trader. Now, the chance of you getting that what level do you say, 142? your TP or your profit level, you're going to have to run that over some important news and over the weekend. Yeah, remember, yeah, what could happen over the weekend? We could see Israel and Iran, we could see Russia, you could see Ukraine, and a lot of people, in theory, will be taking trades off because remember America's shut on Monday. So you've got to work out that if the PC at 130, which is the inflation figure, is high, yeah, we are going to get we are going to go and get the US say they're going to raise rates more. So therefore, on the basis that the dollar is going to rally. However, if the PC is lower and rumors it is going to be lower, you should be okay to get your price. But as you said here, what you're going to find out round and about 129, 130 this afternoon, UK time, there'll be nothing in the market. If you look here, you see the order book on the right hand side here, where I'm putting an arrow here. That's fairly busy at the moment. But at 1:30, because no one's trading, remember August, this week, we've had the second lowest volumes ever on Wednesday, and Tuesday was the lowest volumes ever. So you'll be very wary that do you take some money off the table if you sold it there, i.e. take half your profits, because these figures that are coming out at 1:30, 2:45, 3 o'clock, all the ones down here that they were saying here, respect them. Because you don't respect them at your peril. And a lot of technical traders said, why do I want to know what a figure is? Well, if something comes out and Mr. Powell says, we're not going to cut rates, you know what? The dollar rallies. Gold comes off, all those things, and obviously equities come off as well. So we're always trying to say from an institution point of view or a professional point of view, we have to look at our technicals and our fundamentals, and in theory, probably look at our fundamentals more than our technicals at the moment, because we know all the central banks have told us they're data dependent on what they're going to do. And as we saw today, Bank of Tokyo have said they may, raise rates sooner rather than later, which is good for your position because, in theory, that should make that yen go back to 140.
Yeah, I understand. So, what a beginner should look at the currency pairs. Could you insights on currency pairs and how to trade the currency pairs?
Well, the same thing. It's a very simple thing if you're trading here. While my currency thing loads up, my computer's a bit slow this morning. Is that certain currency pairs, are less volatile than other currency pairs. You mentioned the dollar yen. That's the most volatile. And how do we know how volatile these currency pairs are? Well, I'm using IG here. We just go into IG here and we come in here. This is the pound, And this is key lesson to learn if you're coming in here. We're not going to trade yet. We're just going to go in here. So we've got 1 unit here. Now, if we wanted to trade 1 unit on IG, you would have to have at least 438 pounds sterling in your account.
Okay.
You can see that. You see it down here, 438.45 in here. Now, that's, not too bad. But if we go back to the one you were mentioning, the dollar yen.
Yeah.
And let's we don't do 1,000 units. We go here. Again here, 482 pounds. So remember, the reason why the margin's there is because your platform and the exchange, everything else, works out how volatile the market can be, and therefore some of the other effects here, less ones, probably will have less margins in here to trade. Let's have a look here. Let's put a 1 unit up here. And again, a euro pound, 140. Yeah. A quarter of what it was before because it's less volatile. I.e., you think, okay, a range of the euro pound maybe 50, 60 ticks in a day. In theory, your dollar yen, the one that you mentioned, has been very volatile. Why? Because the Bank of Tokyo wants to raise rates and the Bank of America wants to cut rates. So you're getting 100 or 150 ticks movements every day, which is what you want in a way, but you pay for that. So a lot of people are learning to trade and have smaller accounts. Your margin, you have to keep your eye on your margin because you can't afford your margin. A, they won't allow you to trade things, and B, they can stop you out on a wick. So very, very important. Learn about your margins, and leverage. The leverage, obviously, your clients know about because, you can open an account for, say, $200 and they might give you a £20,000 account. The dangerous thing is that sometimes that leverage as such can come back and bite you. So very important on FX. We notice there some currency pairs are more expensive than others because they're deemed to be more volatile. Yeah. And especially over figures. As figures comes out, you get these massive wicks. So you see these wicks here, like you mentioned here, the one yesterday that went up to your level 145.50. That was done possibly in about 10 seconds flat. Yeah. So you don't put your order in, you don't get filled. We saw yesterday, for instance, if we look at the indices briefly, we saw one of the biggest moves on Wall Street yesterday was, in theory, we saw this Wall Street round and about, when was it here? 2:30. We saw Wall Street come off 300 points. This is speed in 7 minutes, and then rally. Yeah, 250 points in the next 7 minutes. Yeah. So the same thing. It's the same thing. Very key to people who are trading. If you're new to trading, a bit like when you pass your driving test, you don't go and buy a Ferrari straight away because you know what's going to happen. Yeah, that's a good example to use. Yeah. Although we like to drive Ferraris, we also learn to drive slower cars.
Managing the risk. Sorry, you said something about managing the risk. So how do you, on a scale, what are the strategies can retail traders to adopt to manage their risk better? What do you think?
People always talk about managing your risk, and it's so important, and you learn that discipline is the key to be a consistent trader. And to be a consistent, you need to have your discipline. So the two are very much put in the same jar as such and stacked away. So you should know how much you're willing to risk. Now, I'm very much against someone saying that you only risk 1% with your account or 1.5% for your account, because people don't understand that. Now, if you turn around and say, okay, you've got £1,000 in your account, yeah. Now, if you're going to risk £100, that's 10%, yeah. But you understand £100 far more than you understand 10%. If I go to the shops and they say, sir, your shopping for the week's going to cost you 3% of your wages, you go, what are you on about? And he said, well, it's going to cost you, 80 quid. You know what £80 is, yeah? When you go to the pub and buy a pint of beer, they don't say it's going to be 0.5%. They say, what is it, £6.50, yeah? So the same thing for you as a retail trader. You need to know reality, yeah? So therefore, it's different when people say a percentage here and there. If you've got a big account, when I was trading for prop houses and banks, you were trading millions of pounds. So therefore, they told you had 5% to lose or 10% to lose, yeah? But in reality, when you're trading your own money, which is far more important, you don't want to lose your own money. You lose other people's money. It helps you a long way. Put it in pounds, shillings, and pence. Put it in dollars. Put it into any currency you want. But you understand that currency, so you know, therefore, when it will hurt. Also, on the plus side, because we should always do your risk on the plus side as well. Because if we're always negative, we're going to stop out when I've lost £100 or £50 or £500. You tend to go negative. Also, on your dollar yen trade, if that gets down to 142.40, whatever you said, and that equals your TP for your day, you say thank you very much. Yeah, I'll take that. That's a fantastic day, and turn the machine off. Yeah, and go and enjoy yourself, because you have to reward yourself. Risk is both ways. Risk has to be negative and proactive. Proactive is that you have a limit in your brain how much you're willing to take home. Remember, when we're trading as a professional trader, we trade month to month in theory. So there's 20 trading days a month, yeah, that we can trade normally. Yeah, take away bank holidays, whatever. So it's very key. So it's not 30 days, it's 20 days. So the same thing, if you're looking at it to become a professional trader, you're going to treat it as though it's a proper job, professional job, because we all have bills to pay, we also have everything else to pay. So rather than trade it as though you're going to a horse race meeting or betting on the football, whatever, it's slightly more calculated than that. So we plan our day out. So we plan our day out to what, in theory, we've got here. Looking at it here, I see this morning maybe German unemployment at 5 to 9, but definitely at 10 o'clock, CPI out in Europe, because that's inflationary. And obviously this afternoon, 1:30, 2:30, 3 o'clock. And obviously, end of August, we tend to get some FTSE selling and some industry selling as the end of the month to come into September, which starts on Monday. So all those things in risk we put into place. The same thing we said, if there is a figure coming out, respect that figure, because the liquidity in the markets will be less, especially in some of those volatile markets. We mentioned them all. Dollar yen very, very, very fiery, and obviously we'll find it out at 1:30 this afternoon. That's what we do on Zoom. Here on the right hand side here, we do have a ladder via the exchange. We've got Euro stocks and DAX up at the moment, and we can see in theory, if anything does come out, we can see the bids and offers. Bids are in green, offers are in red. That will become very, very busy. Yesterday on US markets, you had no idea what was trading. It was so fast. Yeah. Especially when volumes are low. And at the moment, volumes are very low, not just in indices, not just in bonds, not just anywhere else. So the calendar we put up there, we send this email every day, gives you a clue when the markets are going to be fiery, volatile, and therefore you look at that and obey that. And other times, if it's going to be quieter, you might want to do bigger size or less size. So you're disciplined on your FX. That when do you trade 0.1, 0.2, 0.5, 1, 2, 3, 4? When do you go McDonald's supersize? Yeah. All this you need to learn and prepare, because you don't trade big time the whole time. Obviously, some news to picks when you trade bigger or smaller. That is what makes probably from a hobby retail trader to a professional trader, in that he can change guns he's firing from a water pistol to a tank or a nuclear missile. Because if some news comes out now, for instance, and we said to your members now, let's use a big word. What would happen if Iran attacked Israel right now? Bang.
Yeah.
What would you trade right now?
I'll focus on shorting the market, major currency pairs.
Yeah. Which ones? And also, which ones? Because
So
remember, you're saying you would short some. You'd also buy some. Swiss
yeah,
franc.
okay,
Would you buy the Swiss franc? I'm saying all these things you put into your mind, because I'm not sure you don't want Iran to invade Israel. But if it does happen, and things do happen, that's why you need to understand the news sometimes. So therefore, the dollar may rally. Yeah.
okay,
What everyone in our office would do, and you might call it an FX pair, they'd buy gold. Gold would be
okay,
up about $100. As you said, and
okay,
that's what you're going to work out, is that although you say you want to do your currency pairs, now if you make,
okay,
say, 80 ticks doing your currency pair, well done. However, you could have made
okay.
500 ticks buying gold for the same reason.
Got it.
Is that a
Got
point
it. Got
made?
it.
Yeah, and that's what
Yeah.
people say. Why are you doing it? So, well, you have to work out what's the best contract, yeah, for the right news, or for the right figures. There's no point trading pound dollar if when the German CPI comes out. You should be trading the euro or something. So that's got a
Okay.
euro currency into it. And this afternoon, obviously, when PCE comes back, you're trading anything dollar. Dollar yen would probably be the best one to trade. Euro dollar. All those you're working out what news comes out to what's the best fit.
Okay. Okay.
Because if you get it wrong, and I did it the other day, although I made some money, I traded the wrong contract, and I felt as though I'd
Got
lost
it.
money. I thought, you
Got
idiot,
it.
what you should know what to trade. You've been in this game long enough, yeah, because it's not difficult to work out, and
Yeah.
that's what your members need to learn to do. And also the other thing is when not to trade. Yeah,
Okay.
that's
Okay.
what makes a great trader. This morning we've come in, and if we look at these indices here this morning, the major ones, there's one thing we've got in common here. Can you see what's very much in common? They're all
Yeah, I can see
absolutely
the
flat.
stream. Yeah.
They're all flat,
Got
aren't
it.
they? You got the pound dollar
Got it.
change 0.06. euro dollar 0.0, yen 0. None of them are moving. Yeah,
Okay.
and there's a
Okay.
reason for that.
So people
Because
are on holiday.
no
You
news has
mean to
come
say?
out.
Okay. Okay.
No, but I said to you, so
So
there's a reason why all the markets are absolutely flat at the moment. There's no interest.
got it.
Markets have to
Yeah.
move because of interest. The more buyers and sellers, supply and demand. That's what moves the market. But we know
Got it.
later in the day here, because this calendar we put out here, yeah, yeah, is
Got it.
will give us a clue, and the markets will move. What have we got here? Schnabel is a hawk. Now, if your members don't know the difference between a hawk and a dove, a hawk allegedly flies higher than a dove. So anyone who's hawkish, and every central banker is deemed a hawk or a dove or neutral. A hawk always wants interest rates to go up, and a dove always wants
Okay.
interest rates to go down. And if you're neutral,
Okay.
you're either here or nor there. So when people speak, you would say you expect Schnabel to turn around and say, I don't think the ECB should cut rates at the next meeting. So if he says that, the euro will obviously go up.
Okay.
However, he says that if he comes out and says it's time to cut the rates, the euro will go down. These are the simple things that you know. And if you know when they're speaking, according to he's speaking twice, 8:05 and 8:35. Then you've got German unemployment. If their unemployment's worse, yeah, therefore, like America, it means that they may have to cut rates sooner rather than
Okay.
later, which means the euro will go down. And therefore, if there's
Got it.
less unemployment, the euro will go up because they won't have to cut rates. So these are all the things that why the central banks are so data dependent. It's therefore going to move your FX pairs on this news alone. So in theory,
Got it.
it's like being like this. You can ignore your news and just trade your technicals like that. What we're trying to do to your members is open their eyes to say, just listen to what news comes out because it could affect your currency pairs, but B, one thing we haven't spoken about at the moment is slippage. Slippage is a
Okay.
horrible thing because you can put your stop in at a level, like you said on the dollar yen here. Where do we say you put your stop here? 145.50. You mentioned it up here, yeah.
Yep.
But if you put your stop in there, yeah, for instance, and this is a very big lesson to learn, and we're trading up here.
Okay.
We're already trading at one set up here, and the figure comes out, yeah.
Germany
They're
retail
going to turn
sales
around and say the Bank of Japan are going to cut rates, therefore the yen weakens and the dollar rallies. If the next price is 145.90, you don't get filled at your price.
Okay.
Are you aware of that?
Got it.
If you put your stop at
Yep.
145.50, 8 times out of 10 you'll be filled at their price. But if the next price suddenly flies up here from 144.98 to 145.90, you'll stop at
Got it.
50. You'll be filled at 150, 145.90. It's a worse fill. Slippage. Slippage is horrible.
Got it.
Yeah, because
Got it.
you bring discipline, you put your stop in, and all of a sudden you've lost 40 or 50 ticks more than you thought you were going to lose, even though you put a stop in. So you're very wary when figures come out, especially at 130. All your stop is a market order. So therefore, a
Got
lot
it.
of people before 130 may take your trade off, flatten it out, and wait to the figure,
Okay.
and then get back in again. That's
Okay.
quite key.
Got it. See, I completely understand we have to, make the cocktail of fundamental as well as the technical analysis. But for a new beginner who is starting, who doesn't know, who's just, I'm not saying new beginner, he has an experience in trading, let's say 1 year, 2 year, 3 year down the line, but he is not able to, put the puzzle right place on the fundamentals. So what is the one thing, you want to focus for that kind of trader?
Well, the trader is, and there's no secret about it. A lot of those 1 year, 2 year, 3 year traders come under that category of, pardon me, 70% of retail traders lose money. Yeah, it's a fact.
Got it.
Yeah, why do they lose money? Their discipline, their
Got it.
timing, yeah, and
Okay.
also how much they've got in an account. 9 times out of 10, they just haven't got an account that's big enough. It's the same thing. You need a certain pot to
Got it.
trade in, yeah. And if you've only got a tiny pot, and therefore your stops are too tight for anything else, because you've only got £50 to do everything else, you're not going to survive. Yeah, and I know it's a sad thing, and that's why people go over to funded accounts and everything else, because they need the extra money there is to trade, and therefore that's also harder, because therefore your stops have to be tighter because of your drawdown. And we do a drawdown at a later Zoom as such, but the main reason they fell, yeah, is in theory because they're hobby traders. Now, to me, if you put a trade on at 145.50 and you've got big news coming out and a long weekend coming out, you deserve to lose money.
Got it.
Because you're thinking, what's in the perfect world you should be all right, but currently in this current environment we're not in a perfect world. If we look at here, and if we look at dollar yen, just put it up here and put it on a weekly chart, yeah, we can see here that what we got here, August the 12th, August the 5th. Now, August the 5th, the dollar yen was trading here at 141.76, and on Monday the 12th, 149.20. Yeah. So in theory, a very short period of time, we've seen that dollar yen move almost 600-700 ticks. Yeah. Now, if you're a hobby trader, you say, well, what's happened here? You know, here, when you get these big wicks here, what does that tell you? It tells you the market's very volatile, and it's telling you they don't know what the market's trading. And you can put this almost into a daily thing, and you can see how wild we were back on this August the 5th, August the 6th. Just in one day, you know, dollar yen went from 141.59 up to 146.41, and the following day we went to almost 148. So in theory, 2 days, 141.70 to 148, and that was all on Bank of Japan. Now, if you're not aware that what these central banks can say and what they were going to do, you're not going to last very long. Yeah, and over the years, so many retail traders come in there and they say, well, I don't know, you know, when you ask them, you know, what is the current interest rates in Japan? What are the current interest rates in UK? What are the current interest rates in India? And they don't know, and you're trading that currency and that FX pair. Well, do you deserve to make money? Of course you don't. Thank you very much. We'll take it off you. But it's as simple as that. So in theory, if you want to trade something and you're new to trading something, you've got to read something. You've got to read up about something, because you know, August here. I mean, August has been a really volatile month. You know, you go back to here. You know, again here, Tuesday the 30th of July, 155 the yen. Yeah, come down here. You know, what's that? 1 week later, 141, 1,400 ticks. You know, look at it. 1, 2, 3. Why? Because the whole time during this thing, the Bank of Japan's chairman, the Prime Minister, and most of the Bank of Japan committee kept saying they were going to have to raise rates because the inflation was going up, and also end the carry trade. The carry trade, if you read up about it, and I go into it now, is something that people have been doing for over 30 years. And that's what's kept the yen so cheap. So when we end the carry trade, it makes the yen more expensive, which is good for your trade if you're in theory short the dollar yen.
Got it. So thank you so much for your advice today, because I know you have got another meeting to join in a couple of minutes. But
all I'm saying is that on that meeting, we have a meeting pre-opening. This is how much the difference between being a hobby trader and everything else, at 7:50 every morning and at 2:20 for the US. And I think you might be probably doing one for India early in the morning, because it's a great time to trade at 3, 4 o'clock in the morning. So we do this to prepare people to know what's going to be coming out between 8 o'clock this morning when the cash markets open in Europe and the UK, and obviously into this afternoon.
Got it. So that's it. So thank you so much for joining in, Neil, and thank you so much for joining. Let's see you on the next day.
Have a good weekend. Yes.
Bye-bye.